So, if you own gold on leverage, I'd take some profits here because I've had a big move. But if you're structurally owning gold then I think you stay invested. But you should be prepared for, logically, we should have a period of consolidation.
How long could that last?
Could last between 6 to 18 months.
That's really long.
Yeah. But I'm not, but because I'm just talking if you're a technical chart guy, that's what you'd be thinking.
Right, right.
But they probably would have argued the same thing a year ago. But I'm staying, in my view, gold can easily reach $10,000.
In how much time?
Within 5 years, easily. It's just a question if we have more of a correction before.
And then bounces up from there. Understood.
And gold and oil stocks are the only way to hedge these geopolitical risks.
I wanted to talk about that.
I see the more gold goes up, the bigger the risk that they ban ownership of gold as well. Because back in the...
Is that possible?
Not in India, no. Yeah. But in the Western world, yeah, it's possible. In America in the 1930s, they banned ownership of gold, personal ownership of gold. But a positive trigger for gold is the US could decide to revalue the gold on the Treasury's balance sheet. Because I think I'm right in saying that is on the government balance sheet that's a very low price. I think it's $32 an ounce.
And you think that could happen?
That's definitely a possibility. A revaluation of the gold.
To try and service their debt.
Yes, because Scott Bessent has referred in the past to monetization of the Treasury balance sheet.
Yeah.
So in theory, they could revalue the gold and buy back their debt.
But all these central banks have too much gold in the world.
Now, the reason gold...
For the US to call it that. Or is, you think, the ballooning debt a bigger concern?
No, the gold they own. The gold the US owns. So but what's caused this gold, what triggered this latest gold rally from in the last 3-4 years is central banks outside G7 buying gold, which was a reaction to this gold buying really picked up when you had the freezing of the Russian foreign exchange reserves. Back in 22, when the Ukraine-Russia, that's when the gold buying picked up. And since then, every quarter, based on World Gold Council data, we've had net buying by central banks. Well, the buying's been central banks outside G7. So clearly, the people were shocked by the freezing of the Russian foreign exchange reserves, and they just no one made any formal announcements, but they just took the view that if this could happen to Russia, it could happen to us. And the interesting point right now is based on current gold prices, central banks globally own more gold than they own treasury bonds. And
Bitcoin. I do remember that you did talk about quantum computing and how that's a sort of structural risk to Bitcoin.
Yeah,
it's been hugely volatile, though. But what's next for Bitcoin? Well, or other cryptos?
Well, yeah, the history of Bitcoin is a 4-year cycle. And it normally peaks about a year after the halving. So it looks like it peaked in late October. Peaked a bit lower than what I thought. I was hoping it was going to get to 140. It got to about 125. It only was there for about 2 days.
Nah.
So if it follows the normal pattern, which is my base case, Bitcoin should bottom a year after it peaked. So last time it bottomed when FTX blew up. So it will probably bottom October, November this year at maybe. And the question is, does something blow up with it?
Yeah. Do you think there could be something?
Well, there's these various treasury companies in America, so they're the vulnerable ones. I mean, listed crypto plays. But the quantum risk is further away. But what I've been talking to people who understand the pure maths of this, if quantum arrives, then it is an existential issue for Bitcoin. So the Bitcoin community is trying to come up with a way of preemptively addressing this issue. But if quantum arises, is also an issue for e-banking.
Yeah, yeah. And then whole domino cycle of
Yeah.
all that goes
Yeah.
around with it and what happens to AI companies and digital infrastructure.
But obviously, if you're owning Bitcoin as a store of value, as a kind of digital gold, any existential risk like that is a negative.
Understood. What's looking like a economically safe place in the world right now? Any country that you would recommend a 25 to 35-year-old to move in?
But what do you mean? Well, there's nothing wrong with being in India. Yeah.
Yeah?
Yeah. Oh, you mean safe, physically safe? Or?
No, economically robust, with good prospects.
I think India is as good as anywhere from that standpoint.
Great. And if a young Indian wants to start a business right now, in your view, what should that be? Capital not being a constraint.
No, I think the opportunity is here in India.
And all that money is going to find its way into gold.
Yeah, and if the Federal Reserve really starts being much more hawkish, then obviously I'll be wrong and gold will correct, but it's really hard to see that happening in reality.
I hope not.
Well, yeah, Kevin Walsh has committed to shrinking the balance sheet, Fed balance sheet.
And there's no other way than gold.
Well, if he really shrink the balance sheet, as he said he will, then that would be negative for gold and good for the dollar. But I have a hard time them doing that because that's going to have all kinds of collateral damage because of the liquidity tightening.
Well, Christopher Wood, not just his views on gold and cryptos, but a lot else coming out through this week right here exclusively on